A few years ago, I was usually in that frustrating situation where expenses would constantly build up and I had no money to pay them off. If you have ever been in this situation, you know how stressful and difficult it can be. The good news is that I was able to work my way out of the scenario over time, and you can too. As a result, in today's video, I will go over all of the ideas, methods, and strategies that you can utilize to get out of this scenario and hopefully go ahead in your personal finances. However, before I get into the topic, make sure to watch this video till the end, as who knows which one of these discussed strategies in here may become your magic wand for you. So, don't miss out any single point. Thank you, and let us get started. Number 1. Make a budget. Until recently, I did not understand why most people did not have a budget. Most people are concerned about the amount of documentation required to make a budget. In reality, it is a lot of work, but it is well worth it. You see, you should approach budgeting from a different perspective. Consider the advantages and how much it will benefit you. And once you have established the routine, keep to it. This is the only approach I have found that works, so make sure you do not lose your momentum. A budget is pointless if it is created and then stored in a file or folder on your bookshelf or filing cabinet. So keep it updated and reviewed on a regular basis. You can also use digital tools and software to make this process more easier. You may find a large number of really nice free online tools with just a couple of touch in your smartphone. In addition, if you are interested, I have created interesting money savings and budgeting related content, which you can access by clicking the links in the descriptions. Number 2. Give yourself a limit on unbudgeted spending. Everyone knows that buying something on the heat of the moment that you had not budgeted for can be fun and emotionally satisfying. That emotional high, though, may fade fast, leaving you with impulsive purchases you do not actually need or want. If this is you, the bitter pill to take is that this must end. In fact, it is the total opposite of good financial habits. Try applying the 1% rule for spending money the next time you are at the mall. The rule states that you must wait a day before purchasing anything that costs more than 1% of your annual gross income. For example, if you make $60,000 per year, you must wait a day before purchasing anything that costs more than $600. This principle applies to personal spending on products you desire but do not require. Basically, the inner fight in your mind of, do I really need this versus do I want this? You have a 24-hour cooling off period to review your purchase. Why not give it another day to see if you really need it? After 24 hours, you might not anymore. So, remember what that guy from Future with Finance suggested you to attempt the next time you go shopping. Number 3. Save for big purchases. Seeing a lovely $4,000 commercial for a stunning 90-inch flat screen 8K television, imagine what you can view on that TV. This does not imply that you should immediately grab your phone and credit card and telephone the number displayed on the screen. That is a terrible concept. Remember the 24-hour rule that guy from Future with Finance taught you about? Do you remember that? So, experts advise that if you really want that big TV, the money should come from a savings account set aside for such expenditures, not a credit card loan, unless you have a solid repayment plan, which 99% of people don't. Furthermore, there are numerous advantages to saving for a large or expensive purchase. If you save up and pay cash, you may be able to negotiate a lower price or, at the very least, better financing terms. The price may also fall. Furthermore, getting a loan for a larger purchase may make more sense, especially if it is an item with growing worth, such as home, or if it keeps you from taking money out of your savings or investment account. Because paying with cash for the huge expensive TV may leave you with little to spend. It is a good idea to save up for a while before purchasing the things you need or desire. As a result, it is important to begin saving for that specific item so that your regular life is not affected. Number 4. Read books about finance. It is true what they say. If you want to hide something, just write it down. The unfortunate reality is that most people never read. Some of the things individuals choose to overlook, such as knowledge in books, have a decent chance of making them successful if they bother to read them. Learning is an ongoing process, and the more you do it, the more refined your skills get. The capacity to make sound financial decisions is the greatest advantage of financial literacy. It provides us with the knowledge and skills we need to manage our finances effectively, including budgeting, saving, borrowing, and investing. As a result, we are in a better position to achieve our financial goals and build financial independence. It is almost like having superpowers, and it really puts you at ease knowing that you have control over your financial situation. Are you enjoying the video so far? Hit that like button and subscribe if you haven't already. That will truly help us a lot. Number 5. Lower your monthly bill. One of the simplest strategies to gain financial control is to reduce your monthly spending. While you may not be able to reduce certain fixed expenditures such as rent or vehicle payments without making significant lifestyle adjustments, you can reduce variable costs such as clothing or entertainment, or being adaptive and thinking wisely. To start saving money on things like your energy costs, you may use less power, switch to a different life or home insurance company, or buy for goods at bulk discounts. Furthermore, you should not accept a loan simply because your salary and credit score qualify you for one. Many individuals assume that if they cannot afford a credit card or a loan, the bank will not grant them one. However, the bank is only aware of the income you have disclosed and the debts shown on your credit card report. The bank is unaware of any other commitments that would make current payments difficult for you. You must thus decide whether a monthly payment works for you based on your income and other monthly commitments. Number 6. Stop using credit cards. Credit cards are a fantastic and useful instrument to have. They are a lifesaver when needed and perform an excellent job of raising your credit card score. However, for some people, a lack of self-control combined with an easy and accessible solution to their problems in the shape of a credit card means that they quickly dig themselves into trouble. If you are having difficulty making ends meet each month, you may be relying too heavily on your credit cards. If you continue to rely on credit cards to get by, you will soon find yourself in debt. As a result, your capacity to pay your bills, save for retirement, or pursue other financial goals would be hampered. So, if you truly want to take control of your finances, quit using credit cards to avoid adding to your debt. Try switching to cash or debit cards, setting a budget so you do not have to use credit, opening a short-term savings account and using funds from it for significant purchases, or keeping your credit card at home. Credit cards contain high interest rates that, if not handled correctly, can quickly accumulate debt and cause tremendous stress in the event of an emergency. Many people develop the undesirable habit of relying on credit cards because they believe their money vanishes too rapidly each month. They are cash-strapped and rely on credit cards to get by till payday after paying bills, food, rent, or mortgage, and other expenditures. Instead of relying solely on credit cards to cover expenses, discontinue their use entirely until you gain the insight and maturity to handle such a weapon. Number 7. Eat at home. Meals cooked and consumed at home can save you a lot of money and cut down your huge monthly expense. All you need to do is cut back on your reliance on takeaway. The occasional indulgence at a nice restaurant is acceptable, but starting to cook at home or bringing packed lunches to work instead of dining out every day may save you money. Making a weekly dietary plan could help. Plan your meals for the week ahead and stick to them. Even if you do not consider yourself a cook, the internet has a seemingly endless supply of culinary and recipe guidance. Begin by preparing at least one meal at home each week. Starting next week, bring your lunch to work. You might be surprised at how much money you can save. I hope you found this video helpful. You can now stay on top of your finances by simply adhering to the steps discussed in this video. Consider the likelihood that you have never experienced a financial crisis. That just implies you will have more money. If you have any queries, please leave them in the comment section below. That being said, thank you so much for watching, have a wonderful day, and I will see you in the next one.